Let's go across to Mr. Sanjiv Bhasin of IIFL Securities to discuss more on that. Mr. Bhasin, thank you so much for joining us. You've been extensively traveling India as well as abroad. Tell us what the market mood is like, what are investors talking about, and when are we going to see that 18,000 mark on Nifty?
Yeah, good afternoon, Anisha, to you and Pankaj. 18,000 is coming within a week. The pessimism at 16,800 was grossly oversold. We were overdone on all parameters. At 17,500 is the equilibrium, and only above 18,200 is the start of a bull market. And make no mistakes. We are going to new highs in May. I think from my travels, what I noted, people are ready to put their money where their mouth is. The pessimism is maximum in the metros, the large metros in India and on the TV channels. Aside from that, only bullishness and people who want to commit to SIPs and make equity as an asset class. That is why, Anisha, you saw 14,500 come in the month of March and in a difficult month. So I have no two ways that India is going to outperform, and I'm very, very optimistic. By May, we should be closer to 18,500 on the index, and more than that, stock specific outperformance will continue.
So stock specific outperformance will continue. So let's discuss stocks exactly. Mr. Bhasin, from the financials world, what are your top bets? We just got the numbers from ICICI Bank and nothing much to complain, right?
Well, Anisha, first let me tell you the outperformance. Who thought DLF and Godrej were beaten down to pulp? They'll be up 40% in a month. If you recollect, closer to January, we had given those as two of our topics. Now coming to numbers, ICICI numbers are superb. I mean, look at the gross formation, look at the lending, look at the cost of money, look at the NIMs. I think ICICI is going to 5 figures in the next maybe 2 weeks. There's no question about that. And financials across the board, whether PNB, whether Bank of Baroda, State Bank, or an IDFC First. The simple reason is bond yields are lower, inflation is lower, crude is lower, and still you are in a pessimistic mood. So you cannot have it both ways. I think banks are doing extremely well with inflation under control and the RBI being on hold. There is no two ways that net interest income margins are going to rise.
Okay, so net interest margins are expected to rise from here on. But Mr. Bhasin, you also just talked about how DLF, Godrej Properties, etc. have been doing well. And Capex as a theme is something that a lot of us have been bullish about. What's the best way to play it? Is it through the likes of L&T, etc.? Is cement a better play?
Both. Very good question you asked. You cannot have housing prices the way they are in DLF or where I stay in Gurgaon. The prices are up 50% in a month and DLF saw record sales. Cement prices are hitting new highs. And let me tell you, for Ultratech, which is one of the largest players and one of the biggest in our portfolio, cement costs are at a 2-month low, given that coking coal and fuel prices are low. Ultratech has 138 million ton capacity. I think price rise is just round the corner, and once you're through with the monsoon, you will see that cement consumption is at an all-time high. Ultratech, Grasim being the holding company and the business in VSF, VFI is doing extremely well. And lastly, Larsen and Toubro. Where have you seen the guidance of double digit, higher double digit by Larsen? Their order book is at an all-time high. And I think CapEx stocks are going to be rule the roost for 2023 and beyond. So yes, Ultratech, Grasim, Larsen and Toubro are 3 of our topics, and we would recommend staying with these stocks.
So Ultratech, Grasim, L&T, these are your top bets coming to the domestic capex story. But within financials, insurance was one space, Mr. Bhasin, which was very neglected. It was difficult to calculate. People started giving it a discounted value also because of what happened in the budget. But today we are seeing a big reaction coming in for HDFC Life. Would you recommend a buy there as well?
Yeah. So as a disclosure, these stocks are under our coverage and we are in a buy mode in these on decline. HDFC Life closer to 470, 480 we accumulated. For the simple reason, Anisha, the taxation on the bond funds means that the 31st December onwards, bond funds are seeing huge redemption. That money is going back into insurance and into SIPs. And insurance, you can't have a better play than HDFC Life. Plus this overhang now, which was there, that the erstwhile HDFC might have to unload. In fact, the HDFC will have to up its stake. I think insurance is a no-brainer. If you do fixed deposits, rather than that, put your money into insurance companies, because we are just at the tip of the iceberg as far as insuring ourselves go. And I think HDFC Life, the way it has recognized their model, the takeover of Exide to get the rural reach. This is a no-brainer. This stock can hit 750 in this year itself.
What about Sterling and Wilson Solar, Mr. Bhasin? Because you were quite positive on that as well. Do you continue to maintain your positive stance?
100%. Just don't go by one quarterly results, because that's a one-off, and the company's clarified that in this quarter there was some one-offs they had to write off. They are talking of an order book of almost 8,000 crore in the coming year. They had an order book of 2,000 crore last year. Plus, as yet the parent company orders have not come. And today you've seen Reliance has done away with the NCLT merger of Reliance Power, New Energy, which means all the earnings of Reliance will now go into Reliance New Energy, which is a 40% holder in solar power in SW Solar. Plus, Anisha, SW Solar is the lowest cost EPC player in the world, third place and the largest. It has a nil debt. It has a 18 crore equity, and if they start doing 10,000 crore in the next 2 years, which the management has guided, this stock is going to go double more than that. And you realize that solar PVs are going to be the theme of the day, month, year, and the century. And I think that for India, Sterling and Wilson can be a very big outperformer on the back of Reliance Energy picking up 40% stake and all the parent company business now being rooted. Aside from that, they have an 8,000 crore order book, which has nothing to do with the company orders as yet.
Bhasin, you are quite positive about quite a few spaces, capex, financials, etc. What's the space you are bearish on? Because the entire market can't have a runaway rally, right? Is it IT that you're bearish on, or something which is at least an avoid at this point of time?
Well, actually, to make little bit more, make it more little bit interesting. Actually, IT will lead this market. IT is now very close to very key technical supports, which my team tells me, and I think TCS and HCL Tech can be bellwethers which can lead this market higher. On the consumer discretionary, I would be little cautious and take some money off ITC. That has been one of our top picks from 200 levels. Above 400, we are taking money off that. We are also booking money in lever, given that there is a little worry on the monsoon. But capex, cement, banks, you can take it from there. These stocks are going to run. And I've given you these 5 names: Ultratech, Grasim, L&T, ICICI Bank, and HDFC Life. You cannot but make money in the coming next month. And mark my words, we are going to 18,000 faster than you could think about.
The kind of bullish commentary the bulls always like. Thank you so much, Mr. Bhasin, for joining us today and talking to us about the stocks that you like at this point of time and which are the short upsides available on that one.